How's it going out there? It's April 7th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, I saw a few things that were really interesting this week, a few stories. And the first was a story on 60 Minutes about Florida's vaccine rollout, which hits home because I'm from Florida. At least now I am, right? I consider myself Floridian. Been here for over 10 years now from New York. So 60 Minutes spotlighted a recent $100,000 donation that Publix, which, if you're in Florida, you know what that is. If not, it's a big supermarket chain, that they made to DeSantis' re-election bid, right? Just like every single company in the world, basically a major company does, right? That they support, and usually they donate to both parties a little bit in one and more to the one they're more favorable for. But that's the way it works, right? Lobbying. So the story suggested that there was a possible link between that donation and the state's partnership with public stores for vaccine distribution. Now, if that's true, that's a major story. That's a big deal. Talk about favoritism and Publix making profits off of this because they know DeSantis, all this, right? If it was true. Well, it turned out that the story was 100% false. And it's not just Republicans that are coming out on this, it's Democrats as well. As director of Florida Division of Emergency Management tweeted after this 60-minute hack job that he said, "I said this before and I'll say it again. Publix was recommended by Florida Division of Emergency Management and Florida Department of Public Health. Nothing about DeSantis or his office partnering with Publix." Now, a reporter from 60 Minutes, and stay with me here because it's not about politics, it's going to roll in why this is important to stocks. So a reporter from 60 Minutes, during that hit piece that everybody saw, showed her asking a question during a press conference that DeSantis was holding, updating everyone in Florida about the vaccine rollout, how it's going, what can they do to make it better. And then after, she asked a question about this, about, what's going on with Publix and a donation, all this crap, they immediately went to DeSantis, where it looked like as if he completely cut off the reporter, saying, "Look, I explained this already. You have a fake story you're rolling out, blah, blah, blah." That's what it looked like on 60 Minutes. And then the reporter continued to try to ask him questions, basically cutting off DeSantis as he was speaking. So, in short, the piece made DeSantis look terrible, and also Publix. This is why it's a big deal. Publix is a very, very big company. And 60 Minutes was accusing them of having special treatment since they donated to DeSantis' campaign. So now the full press conference, the full version of it, because it was a press conference, is being published everywhere. And what really happened was the reporter asked a question about Publix and special treatment, and DeSantis took her question, and he spoke, let's say for a few minutes, laying out how the rollout in Florida takes place, why the story is complete BS. He actually answered in a very nice way. And of course, the reporter cut DeSantis off and accused him again of giving Publix special treatment. That's when DeSantis said, enough. This is a fake story. This is BS. And went on to the next question from another reporter. Now, why is this such a big deal? How does it relate to your portfolio? 60 Minutes used to be the premier program. That's where everyone turned to, right? Breaking stories first. If you want to get a story broke, that's where you went, 60 Minutes. The whole world tuned into them for the real story, the honest story. Now, we know that media, almost every media channel, has an agenda. And basically, to promote hate, make people angry, and support their own agendas or political parties. But 60 Minutes, they didn't just get this story wrong and got burned by a sauce. The story didn't even exist. They completely made it up to attack DeSantis since he's basically untouchable right now. Florida's a swing state. What this guy did for Florida is incredible. Republicans and Democrats who are business owners, these are people that are thanking him up and down because compared to New York, California, some of you subscribers from New York and California that we have, I grew up in New York. I still have friends and family there. Tell me how crazy. Even when I talk to them, they're still scared to go outside. Oh, we got the vaccine, but we're still wearing masks. It's crazy. They're being conditioned a certain way. But this guy saved Florida's economy, and he did it safely. Looking at the stats, where COVID cases crash here along with every other state over the past 4 or 5 months, similar trends, yet we remained open. And yes, you look at, some kids going a little crazy on beaches or whatever. And yes, that was taken care of. But the mask mandate, I don't think has been lifted here. You still have to wear masks in most of the major places like Walmart or Publix or whatever. They make you wear a mask and stay 6 feet apart still. It's not like Texas or anything. So it's not like a reckless thing that he did. He was just looking at the stats and base it accordingly where, what's the best outcome that we could have for businesses and keeping them open while, safely protecting elders. And he did a fantastic job with that. And we saw pictures of spring breakers. These are people that don't live in Florida who are getting out, who are locked in their homes, almost like handcuffs on, saying you can't do anything, don't go anywhere at all, even though you're under 18 and this disease is, when it comes to COVID. I mean, you have a better chance of dying from the flu now, what the statistics are showing, than COVID if you're under 18 years old. Now, the bigger point here is the people, you, and everyone. And we're being fed a complete line of bullshit. And it's not anyone's fault. I mean, it's not your fault. I shouldn't say it's not anyone's fault, but it's not your fault because we only know what we read and what we watch, right? And how else will we know what's going on in another state or country? We're not actually there. We're reading stories all the time. So when you're publishing things like this that have a political, it's very, 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 very dangerous. And to be clear, this isn't CNN or Fox News. I mean, they have their audience. They have their demographic that you know what those are. You know exactly what you're going to get when you watch these channels. That's fine. That's what they do. And they're open about it. So conservatives, liberals, those are those channels. I'm not talking about those channels. You know what you're going to get when you watch them. This is supposed to be, we look at 60 Minutes, an unbiased news outlet that people can trust, that do not tell lies, and especially does not have a political agenda. But this was a complete disgrace. I love the fact that the story's not going away. I love that both sides, Democrats and Republicans in Florida, came out against 60 Minutes. It came together. Said, hey, you guys had no proof this story existed. More important, you did a piss poor job finding sources to support their lie. They didn't even find good sources. None of it exists. And what they showed everyone on 60 Minutes compared to what really happened, that's a scary thought. Now, the next thing that happened this week, and again, I'm going to explain why both of these stories are extremely important to anyone who owns stocks, a 401k, owns assets. So Georgia passed a law where you must show your ID to vote. I don't get it. For some reason, this offended so many people. This is such a bad thing, right? Even though we have to show our license to get on a plane, to get a job just about at any company, to buy a car, to purchase a home, to open a broker, we have to show a license, right? It makes sense. And showing ID reduces the risk of voter fraud dramatically, which every American should be in favor of, right? Because that's our right to vote. We want to make sure those votes are counted, and they're exactly right. And no matter what side won, the other side was going to claim voter fraud, no matter what side. And if you think that's crazy, look at when Hillary Clinton lost, they all claimed it was fraud. Just go back to the tape. Nobody really plays that in the media again. The media has an agenda, but it's the same thing. They were like, this is BS, this didn't happen, it's voter fraud. Because that's the way half the nation is. So how do we remove that? Well, you show IDs is a pretty good idea, right? You could have reduced that risk. Stuff, mail-in voting and stuff like that and certain things. But is that like a game changer? Is that where everyone wants to, put their foot in the ground and fight that's it? Like, that's the fight? So shortly after this passed, Major League Baseball came out and said, we fundamentally support voting rights for all Americans, but oppose restrictions to the ballot box. Like, this is going to restrict people. Everyone has a license. They have ID. Why is that restricting? I don't get it. So therefore, Major League Baseball said, we're moving the All-Star game. We're moving out of Atlanta, Georgia to punish them. And you know where they're going? To Colorado. Yeah, Major League Baseball having pressure from a small minority, right? These are the people who cancel culture people, and also its players. And, they decided to move the game out of Georgia. Now, there's a huge uproar by Georgia Democrats saying that, maybe this wasn't a good idea because this is going to crush small businesses in the Atlanta metro area, which is over 50% African American. So you talk about the ultimate backfire to try to make a statement. There it is. Even better, they moved the game to Colorado, which has the same laws in place for voters. You have to show voter ID. You have to show ID to vote. Now, here's where everything comes together. Because we have corporations now. Holy cow. And we knew corporations, you should know, they don't really give a shit about voters. They don't care about you. You know, they care about profits, right? I mean, Coke's biggest market is in China, who they praise publicly how well they handle the coronavirus. I mean, just a newsflash. China killed 550,000 Americans because they did not close off their international borders when they knew how dangerous the virus was. They hid it. They didn't let anyone in the country at all, not even the CDC. And the CDC also came out and said, hey, China did a great job. When they weren't even allowed to go into China. Weren't even allowed. This spread, and we're just talking about the U.S. 2 million, 2.5 million, how many people died? But Coke praised them. You guys did a great job with the coronavirus. Why? Because it's one of the biggest markets. It makes sense. Now, why am I bringing up Coke? You had Coke, Delta, UPS, Home Depot, lots of other companies come out against Georgia and this law. And again, maybe it's me and I don't get it. Hey, there's other much, much bigger and better fights to fight. This just kind of makes sense from both sides. Anything that could reduce the risk of voter fraud makes sense on both sides, right? That reduces it, right? Shouldn't you have to show your license to vote? I mean, if you don't want that, think about it for a minute. What are you saying? I mean, you want people to be able to vote without even knowing who they are? Or if it, I don't get it. I mean, how could you actually be against that? That's insane. Then you have Delta. And again, that irony is even greater because you need to show an ID to board a plane. But they come out, it's terrible. ID voting, suppressing voters. Again, not some crazy BS law here. Something that's going to drastically reduce the risk of voter fraud if every state would do this. Now, looking at the bigger picture here, I mean, this cancer culture garbage is becoming a joke. I could tell you people are absolutely sick of it. They can't take it anymore on both sides. Look at Major League Baseball, NBA, NFL, sports around the world. And this is what we turn to. I played sports my entire life. I'm a massive sports fan, as you guys know, right? Talk about the NCAA basketball tournament, the NFL, everything. Just a huge fan of sports. And you turn to sports to get away. I used to play basketball because it made me think of nothing. I was in the zone and that was it. I was able to forget everything. And it was awesome. That's what people do. They turn to. You can't have a better storyline because it's, like everything on TV is predictable. Even reality shows, predictable. Most of them are scripted. Games like this and the NCAA tournament, they're not scripted. It's amazing. It's excitement. It's a place you take your kids to. And now it's become a political platform that's really destroying these sports. I mean, you want proof? Look at the numbers of every major sport, how they're down. They're down incredibly across the board. But I have to tell you, I am definitely done listening to professional athletes with $200 to $300 million contracts talk about how America is such an unfair country. I mean, are you sick of that? I'm kind of sick of that. If you really think it's unfair, donate the $200, $300 million to all of your charities. Don't just donate the 1-2% that your accountant says to do for tax purposes. Donate it all. Or better yet, move to another country. Try to get that opportunity that you have, the money that you make. Try to get that opportunity because you worked hard to get that. It's amazing that you got that, but to say America is unfair, these are the people that are speaking out, saying America is unfair? Are you kidding me? That's insane. I said this earlier. This isn't a Republican-Democratic thing. Although I am going to get negative responses from Democrats. That's fine. But it's not a Republican-Democrat thing when it comes to cancel culture. I mean, I have plenty of friends who are both, and most do not support this cancel culture BS. They're hardworking Americans. They love the country. We have different views on how to make America better. And in the end, we all want the best for our children. Provide a safe environment for them. That's what we all want, right? All of our goals. But we just have different ways that we think we should get there. And that's fine. That's what debates are about. But cancel culture? Cancel things? I mean, we learn from our mistakes in history. We want to cancel all that stuff? That's why we're the nation we are today, where almost anybody can make it. It's why everyone in every other country is dying to get into the U.S. Yet we have these people complaining? I mean, I travel around the world. You know what? You try traveling around the world, you're going to realize how special and how lucky you are to live in America. But moving the All-Star game because of politics? And having 60 Minutes to a hack job story, which, again, 100% politically motivated. Telling us how, white people are privileged and should apologize for being privileged. I mean, what? Dad should apologize for working 3 jobs, barely seeing his kids grow up, for a good 7 to 10 years to make a better life for his children? Should I apologize for working my ass off to get to where I am, commuting 2.5 hours every day to go to Wall Street where I wasn't making a lot of money at the time? Then starting my own company, hiring great people, providing a service to help everyone out there make a better living for their families through investing. I have to apologize for this? Really? I have to apologize for that? But the main point here is corporations. The fact that they're making public statements about politics is really, really scary. We all know you could bribe politicians, again, lobbying, both sides, and that's acceptable. But companies usually do that for their own good. Getting special incentives, which will help them increase profits for their shareholders. That's the game. Everybody knows it. But to do something like this and speak out, politics, what a state is doing is insane. It's totally different. It's a big deal. Because now you're seeing people boycotting these companies. And you say, well, it might not be a big deal. Coca-Cola and Delta, it's not going to... Let me tell you something. What do we have? 75 million people vote for Trump and 80 million plus vote for Biden? I mean, the country is a dead split. And to piss off half of these people with a BS political agenda that really has nothing to do with your product. Not to mention, I mean, look at the lawsuits that Coca-Cola has for discrimination. And again, having their rollout in China and the NBA, I mean, that's where their brand is. That's where the growth is in China. I mean, how come nobody's calling out China? And again, I'm not talking about 99% of the population. I love China. It's a place that I might even live one day. That's how much I loved it when I visited. And I visited a lot of different areas. But we're talking about their government, who's communist, suppressing. I mean, that is crazy. Like, they could have stopped this. They could have stopped this. And it's spread around the world. I mean, how many people you look at 550,000 people die. You know how many people are depressed? I mean, kids in school, and you took a year away from learning. I mean, this is stuff they won't get back. It's incredible. And they're not being held accountable. They'll never be held accountable. No way. But it's funny how all these companies are okay with that. But really, a law in Georgia that says show your ID, that's the stand you're taking? I mean, you talk about that many people and suppressing them, it could result in something pretty bad. And you remember, these companies right now, you hear it's S&P 500 is trading at a new high, NASDAQ, Russell, everything's at a new high, markets go higher, higher, higher. These companies are trading at super high valuations, and they're priced for perfection. So any setback in earnings could push these names down considerably in the quarters ahead, and that's a big risk because some of these names you have in your 401k, which you probably don't even know because they're in an ETF, or maybe you own individually. And again, I know Coke, Delta, they're huge companies. But if just 5 to 10% of people say, you know what, I'm not buying their products because of this, which is happening. You're seeing news stories out there. And you're seeing both sides saying to boycott companies. Both sides are saying it now. Both sides boycott, which means half of their business could be lost for some of these names and some of these companies. But if you just get 5, 10% of people say, I'm done, and these stocks are going to fall considerably. So be mindful of the stocks you have in your portfolio. Which ones have a political agenda? Because not all companies have spoken out against, Georgia and the new law and stuff like that. And as for Major League Sports, I mean, I can be honest here, and sorry to use this language, but the commissioners of these leagues need to grow some balls. They really do. They need to keep these plays in check. Of course, everyone has a right to express their view on social media, public platforms. That's your right as an American. Not on those platforms. NBA, Major League Baseball, NFL, those are not public platforms. Those are businesses. They're built for profits, and profits are getting hurt now because of these agendas. And they're going to continue to decline if you continue to mix politics with sports. It's not what people want. I go even further. No diehard sports fan. Not one of them wants this. They don't hear politics when they're watching sports. So be careful of the stocks in your portfolio. It's a big deal. A lot of these companies aren't reflecting a minimum 15% tax. A lot of large companies. I'll cover that later on in podcasts. Maybe a couple of videos on Curzio Research YouTube page of companies that's going to impact a lot of large companies. There's like 50 companies that industry leaders that could hurt. Also, you're going to see the tax rate be raised to 28%, corporate tax rate. We saw that was a boom to profits, regardless if you agree with it or not. But what you need to know as an investor, keep politics aside, is that's going to hurt profits. That's going to result in less R&D. That's going to result in less marketing, fewer ad spends, which results in lower revenue. Again, we are priced for perfection. And if you throw these things in there, which those taxes are coming, nobody's really talking about them. They're going to come pretty quick. And you throw in 5-10% of people saying, I'm not going to fly Delta. I mean, you can fly. Do you need to fly Delta? I mean, Delta's hub is in Atlanta, which is right by me, so I use them the most. I'm not boycotting anybody, but some people are. But I could fly any airline I want to go anywhere I want. I don't need Delta. You don't need Coca-Cola. I mean, you look at these competitors. They have great competitors that are big. UPS, we have FedEx, Coke, Pepsi, Delta, United Airlines, tons of different airlines. I mean, there's other places you can go. It's not like the only show in town like Facebook is when it comes to advertising. And that ad spend, the return on ad spend is never greater than any other place ever, maybe on Google. There's other options. Just be careful if you own these companies in portfolio, because if they miss earnings estimates at these crazy valuations, these things will fall 10, 15% in a day and probably trend lower because everyone's going to get out of them, breaking through the 200-day moving average, and you're going to see these things fall even further. So just be careful, guys, because a lot of stuff that's going on in the world you need to pay attention to because it's going to impact your portfolio. Now, it's time to get to my interview, which is sponsored by blockchain.com, one of the most trusted cryptocurrency platforms in the world, over 70 million wallets and over $800 billion in transactions since 2011. The site that I use. Not only can you trade your favorite cryptos on blockchain.com, but you can earn up to 30% interest annually on your cryptos like Bitcoin, Ethereum, or even stablecoins like USD Tether. So for more information, start your account. Just visit blockchain.com. That's blockchain.com. Now, this week's interview is with fan favorite John Petrides. John's portfolio manager at Tocqueville Asset Management, great friend, super smart analyst. If you're a Dollar Stock Club subscriber, we recommend a pick from our guests each week. We do like a one-page write-up, includes analysis, catalyst, buy up to price, stop loss. It's a really cool service. It's like $4 a month. And it's one of our fastest growing services. If you're a subscriber to that, you definitely love John. Because John is someone I have on every quarter, kind of like Andrew Horowitz. I have guys on that could talk about numerous things, economy, markets, and stuff, and brilliant people. And I have a decent list of people that I like to put on every quarter, and his picks have been on fire. I mean, he's done an incredible job. So I know you guys are in love with him. We're talking about the last 3 years of picks that he's given us. I mean, I've been interviewing him probably 4 or 5 years now. Again, he's a very, very good friend. That's not why he's on this podcast. He's on the podcast because he's very, very good and he helps people make money. So this interview, John's not going to disappoint. Tell you why he's still bullish on stocks, although a little nervous that margins of companies will come down next quarter. Something I haven't heard. Interesting take. But he's going to tell you exactly how to play that risk through his favorite sectors to own, and also, like always, he's going to share his favorite individual names. And let's get to that interview with John right now. John Petrides, thanks so much for coming on Wall Street Unplugged again, right? Love having you on, buddy.
Yeah, man. Thanks for having me on, Frank. We've been doing this now for a while, and I appreciate you keep asking me to come back on the show.
No, I love it. I love it. We've been keeping doing this for a while, but I don't know if we're still going to have a job if the market keeps going up every single day. So I don't know if people are going to need us anymore, right? So let's get into that, because we're talking about a market, John, that we have, manufacturing 37-year high. We got trillions of dollars, if you want to say hundreds of billions, actually given to people all at the same time. We're seeing more people get vaccinated than ever, where things are starting to open up when after you lock people in your homes for a year, so everyone's dying to spend money. And we're seeing the cyclicals come back, right? So also a great unemployment number. Is all this being factored in? Because as the market is moving higher, I'm not sure we're seeing those profits move higher right now, and maybe they will next year, but are we getting a little ahead of ourselves? Is it going to be like a rotation of capital? Because right now, the risk-reward, you're taking on a lot of risk for not as much reward right now. It's a much different situation than it was in the middle of the year after COVID, but yeah, it started. But what are your thoughts on the market right now? It's something that keeps going up, and I don't know if it can be justified with everything going on, or maybe it can.
So I have a couple of thoughts on this. The first is, basically because of the what the Fed did from a quantitative easing standpoint, money printing standpoint, what the fiscal side did from a stimulus standpoint, and basically the way corporate America responded to do more with less, plugged the massive hole from an earnings standpoint because of COVID. So, for example, the S&P, I think, was expected to do something like $168 a share entering 2020. Okay. And now we're projected to do, the S&P is projected to do something like $183 by the end of 2021. So if you look at that over a 2-year period, that's about a 5% earnings growth per year over that time frame. So that's kind of a normalized year, at least looking back historically over an earnings growth period for the market. So, part of the reason why the valuations multiples are higher, which I think is the tone with which your question is, that interest rates have been so low. And it's kind of like, where are you putting your money today? If the bond market is unattractive and your cash is earning nothing, you're going to put your money into stocks. And I think that's why part of the reason of why, a main reason of why stocks have caught a bid here. But I think it's important for investors to, and we've spoken about this at a million times over the years, you've spoken about this a million times over the years, is how concentrated the S&P 500 is to the 5 largest stocks and to the tech sector in general. And because the S&P 500 is a market cap weighted index, meaning the larger the size of the company, the larger the weight in the index. That's how it dominates. And because tech has been so dominant and those 5 companies have been so dominant, the S&P 500 index has become vertical. It's very concentrated in one sector and in 5 names. So what hurts growth stocks, which is tech? That's higher interest rates. So you're seeing volatility within the tech sector, particularly within the NASDAQ. But if you look at the RSP, that's the Invesco S&P 500 equally weighted index, which basically disregards market cap and says all 500 companies are the same weighted. That's far outperforming the S&P 500 market cap weighted index. And to me, that's a very healthy sign, because for the first time in a long time, investors are getting rewarded for being diversified, right? You have not been rewarded for owning energy, financials, consumer staples. You have not. You basically have had to chase the market and pile into tech and growth in order to outperform the index and have outsized bets in order to outperform the index. So now, for the first time in quite some time, by being exposed to other sectors, investors are actually being rewarded for that, or those investors that are diversified are being rewarded. And to me, that's a very, very healthy sign for stocks.
Yeah, that's a great point, because the RSP is something I looked at, just showing how the FANG stocks started doing very, very well, right, in 2020, a month or two after the bottom, right? So in the middle of the year, and I always said, if you look at the weighted index for S&P 500, you could see how terrible some of these stocks are doing. I had no idea. I'm so glad you said that it's outperformed the S&P 500 as a whole, which makes sense, right? Because if you look at the FANG names, they underperformed outside of the last couple of days to start the year. I guess that leads to the next question is, it seems like there's different pockets, like that rotation where it's cyclicals, the reopen trade. Yes, we know, like ESG companies have caught a bid. Banks, cyclicals in terms of even energy stocks. So, where do we look today? Because it seems like, to me, we have been looking at the last 6 months. We're looking at what's the cheapest sector. Okay, 3D stocks haven't done anything. Let's throw it into ESG stocks. Yeah, I mean, we all knew after Biden won what was going to happen, right? But yet they still took off. The marijuana stocks. What are some of these sectors that you're looking at? And maybe it's as simple as yield, because yields are going higher, right? We've seen a 10-year go higher, and that's 1.7 is a big difference from under 1%, right? So. That risk-free rate, which means one of the things that you stated, which I wanted to talk about, is are we seeing a lot of these companies are going to raise their dividends, and no one's really talking about buybacks, which a lot of these guys suspended. Right. But man, the amount of money that they're generating, especially the FANG names, I mean, they blew out those numbers last quarter and the past 2-3 quarters. Are we going to see a return to that?
So how about I answer this way? Yes.
Okay, cool. Let's go ahead. Let's get on to the next question.
Yes. Right. So I think the way to answer your question is there's a difference between factor investing and there's sector investing. And you touched on a bunch of things. I do think that tech has gotten drugged over the past 6 weeks, 2 months, right? And that is purely based on valuation. I think the market got numb to seeing non-profitable companies with analysts out there saying, on 2000, the stock is trading at 20 times 2025 sales. It looks, but if you compare it to its growth rate, it looks great. And it's not even growing earnings. It's not even profitable yet, right? So I think so many of those tech stocks existed that we just got numb to valuation. And you've seen a massive drubbing in the tech sector. So, and that is a big function of just simply valuation. When interest rates go up, right, it makes the formula on a discounted cash flow analysis less for stock price. And it means that if the cost to borrow money is higher, it slows down potential growth rates. So tech is getting drubbed recently, more so because of valuation, not because of fundamentals, right? So I do think there's value to be had in tech. I think there's massive value to be had in healthcare. The healthcare sector is flush with cash. It is not participating in this rally, probably out of fear of the Biden administration potential policy to restrict drug pricing. But the healthcare sector looks really interesting from a valuation standpoint. The whole cyclical play still, I think, has room to run. Financials will benefit from the steepening of the yield curve. Industrials have multiple levers of playing there, not only valuation, but also the reopening trade, the global economy healing. So, I think there's still a lot of plays out there for investors. Again, if you're willing to diversify your portfolio, not be so concentrated to benefit from. That's the sector side. The factor side, I do think dividend yields, in our enhanced income strategy, we're having a very strong year, or really back since the beginning of, since Halloween of last year, right around when we got the Pfizer vaccine news, and we saw that interest rates started to rise, bonds sold off, and higher dividend producing stocks, which are in this strategy, have rallied very strongly. So, and the world is flush with cash, but looking for places to return on it, looking for places to find yield. And the whole yield story, and this is, a topic that we can talk about in a bit, has switched from, this time last year, everyone was worried about credit risk, right? Will people default? Remember that people were talking about 25% of the high yield bond market was going to default. And only so far you've had a 6% of the high yield bond market has defaulted. To now, the risk on the yield side has switched to interest rate risk, because people are afraid that inflation is going to run rampant, and the Fed is acting as if it's an ostrich. It has its head stuck in the sand and is going to have to slam on the brakes from a QE standpoint, from a stimulus standpoint, harder than what it may intend to do. And that's why you're seeing interest rates rise. So from a factor standpoint, dividend yields and yield-oriented securities are still attractive in our view.
No, and I guess I'll let you share some names at the end, but I wanted to talk a little bit more, because one of the things that you said to me, because I always, whenever I interview somebody, and this as well, I'll say, hey, what do you want to talk about? Some of the things, you've been talking about in media, whatever, and you wrote down one of these topics saying that next quarter, it sounded like, you're a little concerned where margins could be pressured, but you're saying like long-term demand is going to be strong.
Right.
But do you think margins are going to be pressured this quarter? Because if we look at this quarter, right, and the next quarter, it feels like there's an easy comparison right now, because that's when everything started getting bad a year ago, right? Like that quarter. I think the following quarters, and especially like when we compare the last two quarters, we call those comps, right? I guess to bring everyone in here, it's you're seeing year over year. What did you do for that quarter? So the comps, and you see same store sales grow, you're probably going to see pretty good numbers, because this is when things were really terrible, like last year around this time, next 3 months when they report. But going forward, that's when a lot of these companies really, really went nuts. So is it, again, I asked you about the rotation, because I look at the Pelotons and the Zooms where those numbers are going to be incredible. But then I look at some of the other names where, maybe we don't see, margins being pressured because, again, they were cutting back tremendously back then. But you think it's going to be this quarter or the next quarter? And how do you play that?
Yeah, it's a good question. And I think the common theme that I'm expecting to say is maybe you see, now remember, the last two quarters of reporting, companies in the S&P 500, 80% or more beat analyst expectations, 80%. Usually the cadence is around 70%. All right. So you've had massive blowouts. So when that happens over, a couple of periods, you get complacent and think that's going to be the same thing. The problem is that in the short term, we've had a lot of strange one-off incidences that have mucked up the supply chain. Clearly, just the COVID issue has screwed up, has created bottlenecks for most industries throughout the entire supply chain. Commodity prices have really spiked over the past 3 months. Oil prices have gone up, which will impact shipping. Copper prices, wood. I mean, all of those things have just gone through the roof. You had this crazy storm in Texas, and chemicals. Texas is a big producer, has a lot of chemical plants that come out of Texas. That threw off stuff for a day or two. You had really bad weather storms along the way here. So, and you had this Suez Canal issue. All of these are sort of one time in nature, but I do think in the short term that it could distort earnings relative to expectations because there are so many factors. But I would expect management language to be, once we get through this, by the end of the year, earnings, you're going to see a lot more people, a lot more companies show more confidence in their end of 2021 number because they'll have more visibility. So I think all of these issues that I'm expressing regarding potential margin pressure are all short term, whether we see some of that now or for this quarter, or we see some of it in July when the next quarter reports. It's a matter of shifting, the calendar dates. But I think long term, the fundamentals are actually quite strong because as demand comes back, and once we work through these one-time supply chain issues, companies are doing more with less. We're all more efficient today than we were a year ago, and that's all going to fall to the bottom line. And then if companies start buying back stock to the pace that they were doing pre-COVID, that's going to ultimately help earnings growth go forward. So I think the risks that I'm throwing out here, Frank, are more for short-term investors, traders, people playing the quarterly number. But if you think longer term, to me, sell-offs on companies that traders may sell off the news could become buying opportunities, right? So I'm still in a buy the dip mentality here.
So let me ask you this, John. This is a tough question, but what are some of the things you, maybe analysts at your firm, portfolio managers at your firm, are worried about the most? Because it can't be inflation, right? Because inflation we see coming. Everybody knows. We know we see inflation, even though whatever the CPI number is and what they believe it is. We see it, like you say, you just mentioned all commodity prices, food prices, tuition price, everything's up, right? We all know that we're paying those bills. I wouldn't say valuation because everybody cites valuation as well, right? Because we have low interest rates and it's deserved a high premium, but maybe what are some of the things that maybe you don't see that can actually be the biggest risk, right? I mean, the risk that we don't see, but what is something, and that could be easier. That could be like when we're looking at what just happened with another fund blowing up, right? The amount of leverage, and we didn't know how much leverage. These guys are still unwinding here, right? They got the $6 billion in losses. We don't know, and they're not the only firm like that. They had all this stuff off books, but what are some of the things that maybe worry you right now?
Sure. So let's talk about those hedge funds that with a lot of leverage that are blowing up. The only reason why I'm not as, people always go back to long-term capital management from 1998 when you had this hedge fund that blew up and all the banks were tied into those trades and the Federal Reserve had to bail out a lot of the banks. The only reason why I'm not concerned about that is because the Fed is already at the table. We had Lehman Brothers. We had the Greek debt bailout. The blueprint is set. Now it's a moral hazard. And it's part of the reason of why hedge funds take on the risk that they do, because there is a bit of a backstop there. So I'm not overly worried about that because the Fed is ready, willing, and able to protect the markets if something like that were to happen. Okay. I think the two bigger issues that these aren't new risks, but I don't know how much the market is appreciating them yet, is at what level do interest rates rise that stocks start to bend? I think we saw in 2018 that when the 10-year crossed 3% and the Fed funds rate was around 2.25%, is when bonds started becoming more competitive relative to stocks as an asset class. So at what point now does inflation rise enough or interest rates rise enough that investors start to bend from a stock standpoint? I don't know really what the answer is to that yet. So that's a risk. The second one is the Biden tax plan. The market really seems to be looking through that. I mean, automatically you're increasing the corporate tax rate from 22% back to 28%. We've been there before, by the way. basically most of the Obama administration up until about 2015 or so, we had a 28% corporate tax rate. And I think it was Carter, late Carter, maybe early Reagan years, the corporate tax rate was like 35%. So it's not like this is uncharted territory, but how much of that is factored into earnings? And maybe that is the reason why the Fed continues to have the pedal on the metal, because they see this fiscal headwind coming and they don't want to double dip they don't want to pull the carpet out all at once to investors. I'm also concerned on the tax plan. What are some personal income tax issues that the Biden administration plan may have? For example, if they remove the step up in cost basis for equity investors. So basically that means, right now, let's say you bought shares of Apple at $10 in 1997. It's now whatever Apple stock price is today, $120. Frank, you die, you pass it on to your wife. Your wife's inheritance on the cost basis would go to today's price at $122. Okay. You wouldn't pay the capital gains on anything that was there. That's called a step up in cost basis. There's talk of removing that, right? Where then your cost basis would go to your wife. That would be part of her estate, and she would get stuck with a massive tax bill. There's talk about obviously increasing the marginal tax rate on people making over $400,000. There's talk on taxing capital gains, right? You haven't even sold it yet. So all of those things, they're talk about increasing taxes on dividends, increasing the capital tax rate, making it tied to your ordinary income tax rate. All of those things make it less attractive to own individual stocks. And those are structural issues that could take a little bit of wind out of the sails for equity investors. And of course, the biggest elephant in the room is either an issue that we will deal with or our kids will deal with, and that is the mounting debt, that we all face. And how is it that we're printing all of this money? We now have $25 trillion in debt and growing.
Insane.
Everyone, in February of 2019, when there was a Democratic debate, and you had people like Elizabeth Warren, Bernie Sanders, and Andrew Yang talking about all these very aggressive fiscal policy. Andrew Yang, we'll send everybody $1,000 check, per month in perpetuity. And Elizabeth Warren say we're going to forgive student loan debt, and Bernie Sanders throwing out like these massive $1 trillion stimulus packages. And, Wall Street capitalists were like, no way, these are way too extreme. That's what we're doing now. We spent 25% of GDP. Now, I get it, we're in a pandemic, and you had to do this to a certain degree. You got to stop the bleeding before you could fix the patient. But, it kind of feels that people are so numb now to fiscal policy and stimulus that the gates are wide open to go out there and spend however much needs to be spent, and that the Fed will just keep printing dollars in perpetuity and will fund it. And I don't know, Japan, I guess, is an example of that. We've all been waiting for Japan to blow up for 35 years now, and it hasn't. I mean, it's been stuck in a deflationary, or it's been stuck in a low inflation, low GDP growth, and they have structures of their own. So maybe people are using that as a financial experiment, an economic experiment that, you just print money forever. But that, I don't know what to make of that issue. I don't know when that comes home to roost. I don't know how you really prepare for that. Maybe that's why Bitcoin catches a bid, or cryptos, or gold, or, non-correlated assets, that sort of thing to help you deal with, a long-term, risk like that.
No, makes sense. And John, I'm glad you brought
up
the
taxes. So those sort of the three things that
No, go ahead. If you want to finish it, though. I mean, the three things that you brought up.
Those are sort of three bigger picture, issues. Go ahead.
I mean, the corporate tax is a big deal. I mean, people forget in 2017. I mean, there's not 2017, 2018. That's when stocks started to move, but earnings growth is slowed to a crawl. I mean, there was no earnings growth, and then when we had those tax cuts for corporations, they started giving checks to everybody. Again, it benefited corporations, right? And being political here, but you saw the drastic move in double-digit growth, massive earnings growth because of this, and now you're taking that away at a time when we're trading at extraordinary valuations. And yes, I understand the underlying currents are fantastic right now, and they're going the right way, and low interest rates and money out there, but those are one of the things that can really derail it. The 15% minimum tax is going to kill a lot of companies. I mean, not kill them, but it's going to result in sharply lower earnings. And there's a lot of big names on that list, including banking stocks. So, that's a risk that hasn't really been talked about. And again, we want to talk about the risks, John, you and I, because, when stocks are all-time high, we want to talk about the risks. When it was COVID and things are crazy risky, we want to talk about the positives and where we have to invest. So we want to, be fair with everything. I guess that leads to the next question where, you covered a lot. You said healthcare looks interesting, financials, energy, infrastructure. You also said buybacks, dividends, returning. So what are some individual names you like or that will benefit the most from, these underlying trends?
Yeah, a name we recently added to our enhanced income strategy, and it's a name that I own personally, is Gilead, Gild. This is one of the largest biotech companies out there. Gilead has like over $20 billion of cash on its balance sheet. It's the leading franchise in HIV. Gilead popped maybe around May of last year when it came out with its treatments for COVID. You may remember remdesivir. So it caught a bid then, but that has come all the way back in. It's now in the mid 60s. Dividend is over 4%. It's trading at like 11 times earnings PE. It's trading at like 8 times EBITDA, earnings before interest, taxes, depreciation, amortization, which in today's world, in a SPAC world that we live in, that is like a single digit EBITDA multiples is really hard to find.
Impossible.
Very high quality company, new management team. Has spent a lot of money over the past couple of years buying companies to help them break into oncology and cancer because they need to diversify away from their HIV portfolio. And to be honest with you, Frank, Gilead reminds me of that brand new station wagon our parents bought in the late 70s, early 80s. The shiny wood paneling, all tricked out with the 8-track. Deck tape, had ashtrays on the side, even had electric windows instead of the cranks, but it would stall every couple of times. I mean, every now and again along the road trip, the car would stall out just regardless of how pretty it has been. And that's kind of how I think of Gilead over the last 4 or 5 years. They print a ton of money. They've done a lot of key acquisitions. They diversified their portfolio. They've developed treatments for COVID. They have not participated in the rally, and it's kind of had this stop and stall movement. But now they have actually, I think, a lot of catalysts in place, or I think they've done a lot of heavy lifting over the past 4 or 5 years that, to me, makes the stock attractive. And again, when you're getting over a 4% dividend yield, one where they've grown at 11% annually over the past 3 years. And I think 10% annually over the past 5 years, with more than ample enough room to protect that dividend and to grow it further in a low yield environment. Gilead looks attractive. So and that plays, both themes that I mentioned of healthcare and high yield.
No, that's great. That does play right in the middle of all that. So great pick. Love having you on. Let's end with this, which is so important, is how did you do in your NCAA tournament bracket? And did you think Baylor would blow out Gonzaga by the amount they did? Because, man, watching them play that game, I never saw a great team so flustered and having no answers and didn't know what to do. I mean, they just, every defense was amazing.
Totally. So the answer is no. I had Gonzaga, Illinois final. I had Baylor in the Final Four. I finished in my pool. I finished 40 out of 150, which is respectable, but it's not terrible, but it's not good either. I didn't win. I think it goes to show you when you're in a physical game, if you push the other team back, they crumble. What did the Tampa Bay Buccaneers do to the Chiefs? Defense. They pushed them, right? Yep. What did Baylor do to Gonzaga? They were all over these guys. They got, as the Gonzaga guy said, we got punched in the mouth right from the tip. What did the Giants do to the Patriots when they won the Super Bowls back then? They pushed back and they got aggressive. And those teams that feel like they're untouchable, if you get aggressive enough with them, they don't know how to handle it because no one's ever done it before. It's like that bully in your schoolyard, just go up and clock him once and he's not going to be the bully anymore. So that was the game changer and good for the Baylor coach and the Baylor teammate to come in and, you're not going to make history on our watch, right? So good for them.
No, really, really great stuff.
Well,
It was
to be
good. It was
honest
a
with
good
you,
time.
I would have liked to have seen a perfect season. I think it would have been cool to actually.
It would have been cool. I wish it was a better. There wasn't that many good games. UCLA made up for that, and then but before UCLA, there was a lot of blowouts in
Totally.
The Elite Eight. And,
strangest tournament I've ever seen. Right? I mean, the moment that Duke doesn't make a tournament, it's going to be a weird one. So
North Carolina almost didn't make it. Kansas had a struggle. I know, it was pretty cool. So all right, Joe, let's finish with this. If someone wants to find out more information, learn more about you, how could they do that?
Yeah, sure. So I'm at jpetrides2 on Twitter. You can go to Tocqueville.com, TOCQUEVILLE.com. You can find our team there. We manage portfolios for individuals and high net worth individuals and families and institutions. Tocqueville's been around since 1985. We're fee only. We don't sell products or annuities or anything like that. We are straightly just the assets under management. We build long only. There's no leverage involved, so none of these hedge fund issues. And we work to customize portfolios to our clients. So, it's plain and simple. Roll up your sleeves, find out what the patient needs, and help them achieve their goal. That's basically what we do.
Awesome stuff. So listen, John, I don't have to tell you, I love having you on. We also get very, very positive comments because we can go anywhere with this. It's always unscripted, basically. We just have a couple things that we hit on, and you always share ideas. Yep. So I know how busy you are these days and media appearances, so I appreciate you coming on, and hopefully join us again soon, buddy.
Will do. Thanks a lot, Frank. Appreciate it.
All right. Take care, man. Okay, guys, like always, great stuff from John. Love having him on. Also, I love that he's a big sports fan. We always throw some kind of sports in there, which is really cool. We're in fantasy leagues and stuff like that, which is awesome. I want to mention something before we get to the rest of the podcast. You notice that we have a sponsor. It's the first time we've done this, which is a great thing because for our podcast, we'd never had sponsors or anything, and now we have blockchain.com. But I wanted to talk a little bit more about that because we have Wall Street Unplugged, which is a free service. And when I saw the numbers of people willing to pay to do a 30-second ad, I'll be honest with you, it's amazing how much people are willing to pay, especially with our numbers because of you. So what we do is we use that money to either hire more people for the podcast, to market it even more, which is going to result in more people listening to it, which results in us getting pretty much the biggest names in the world on this podcast and the smartest people. And that's the goal here. But for me, when it comes to, this is, my baby. This is like the whole company. This is very personal for me. We've done podcasts longer than almost anyone that you know for 14 years. So to have sponsors on here, it's companies that I only believe in, companies that I use. And what I notice in the crypto sector is they can't really advertise a lot of places. Why? Because I research this industry through crypto intelligence, and 85% of the industry is BS. I know some of these names are going up. You can't find financials in a lot of them. You don't know what's going on. But in a bull market, everything goes up. But a lot of these names are BS. However, there are a few of them that are doing the right thing. I mean, blockchain.com is one of them. But we wanted to provide a platform for this since this is the industry that we're in. This is the industry that I believe in. This is the industry that my subscribers, Crypto Intelligence, have made life-changing money. And we're looking at a product that's up over 700% annually. So when we have sponsors, believe me, I'm not going to throw 10 at you and 1, 2 or whatever, maybe just one, but we have one sponsor. And I just wanted to say, because that might have caught you off guard, say, wait a minute, I never heard that before. But yeah, at the end of the day, look, this is a free service. We provide a ton of information, more than any other podcast I know in the financial area. If you think that's not true, please send me that podcast because I've listened to almost every one of them. The fact that we're doing it this long, it's not 15, 20 minutes or and how we cover everything, the guests we have, some of the greatest out there, the billionaires, the heads of state that we interviewed. And this is a really, really good source, guys. And I love that. That's why, we have a lot of viewers. So to advertise on that makes sense from our point of view. We are a corporation. We are a publicly company now through our CEO token. So for us, that's the goal here. So it's not going to be advertisements everywhere like you're looking at Forbes or something like that. Not that I'm killing Forbes, but Forbes.street.com. I can't even get through that site without going to 75 ads on the front page. That's okay. Not that they'd have bad content, but it's hard to get through. It's never going to be like that here. But I wanted to really talk about that before I went further. Now, again, great stuff from John. I love having him on the podcast. Again, this podcast is about you, not about me. Let me know what you thought at frankcurzioresearch.com. That's frank@curzioresearch.com. Now, Daniel is off this week. He had personal matter to attend, which means I can make fun of him since he's not here. And remember, Daniel is 6'6" and can probably throw me across the office. He's also a sharpshooter. Actually, maybe I won't make fun of him, but he'll be back next week. However, I am bringing back my nephew, Joe Davity, who's 21 years old now. Just turned 21. Loves to trade stocks. I think the last time I had him on a couple months ago. And bring him on to share what he's doing. A lot of beginner investors out there. And how I could possibly make him a better investor, which is difficult to tell people in a bull market when if you can make 8 to 10% annual returns, that's considered great. But a lot of these stocks have gone up hundreds of percent, especially the crypto area. But ESG stocks, yes, they come down to earth. But a lot of these names have gone up so much where it's hard to say or to teach a young investor. And I've been there, I know. You should have this arrogance. I'm smarter than everybody. And you should when you're young. That's, you get slapped in the face when you're 30, 40. You realize you don't really know that much. There's a lot of smart people out there. But young, you're supposed to be like that. And I want to go over some of the things that maybe I could help them out with. But it's not easy to teach someone when it's very easy to make gains in this market. But it's become difficult. A lot of these sectors have gotten hit, including Joe's portfolio. And this is kind of like an educational part. And I have to tell you, the emails coming in, people love this segment because they say, hey, I made that mistake and I understand what you're saying here. And it's real time portfolio, real time everything. So anyway, Joe, I want to say thank you so much for coming back on, man.
I love being on here. It's great.
So I'm going to start off with this because we spent Easter together with my mom at my house. And I have a basketball court in the backyard. We played 1-on-1 basketball. Who won that game? I forgot.
Pretty close. It was a close game. It was great.
Double your age, man. Come on, more than that. You got to be beating me. I mean, he had a shot to win, and it just rolled off the rim, and then then it was done.
Yep.
But anyway, we still. I had to mention it. That's the first thing. Sorry, man. Anyway, if I would have lost, I would have never mentioned it, guys. So of course that I won, I'm going to mention it. But I want to talk about the last time you were here. You had your portfolio is doing very well the first time. This is that you came on. I think this is like the third time you came on, if I'm not mistaken.
Correct.
And then the last time you came on, you said a lot of these names are down. You got killed. I want to see where you are with your portfolio now. And again, you have to go through this process. If you look through every single investor who's great, if the icons or whatever, when they were young, they'll tell stories how they got wrecked. And it's good because getting wrecked, makes you put your, makes you become more aware. Makes you understand the risks, that it's not that easy and what can happen when you lose money. And I describe it as someone who skis and for the first time and they get it and they're really good. They go fast. Those are people who get hurt, right? It's not the people who go really slow, who are scared. No. And then once you get, now you're like, whoa, holy cow, I must kill myself. I got to be careful. That's how it is with the market. You got to go through that process. You can't just start off and listen to some guy and saying, okay, you're going to think you'll know more than that person all the time, especially if you're young. And it is a bull market. Everything's going higher. So, Joe, I wanted to bring up your portfolio and go over some of the things here because last time we had you on, you said you had some losing your portfolio. Let me just bring this up really quick.
Right.
And I could show everybody. But how are you doing today? And let's talk about some of the stocks in your portfolio here.
All right. So today, pretty red for another portfolio update. The last one we did was it March 3rd? So it's been a couple weeks, and we are in the same boat. We have not really moved at all. As of today, we have lost, at the moment, another $140. I'm currently down $19.80 and around 60 cents total.
So your account value is $3,500, right?
As of right now, yep.
And what did you start out with?
With $5,500.
$5,500. Now, you made a lot of money at the beginning?
Yes. Well, I've been in the same tank for now a month or two. All the way back in the beginning, I was doing pretty well, and then I just got too heavy into tech. And as you see right now, it's just bleeding.
So talk about some of these names. Why'd you buy some of them? And it looks like you're down a lot of them, but
right.
CCIV.
Some of them, like that one, I'm not too concerned about because that's pretty volatile. Like last week, I was up like $100 on it. It's gonna be shifting pretty rapidly. Mm-hmm. That one, I'm not too concerned about. I have a lot of hopes of that one.
Why did you buy that stock for?
I actually bought that just because I thought it was a great price, and I've been following that since the merger even really hit Main Street. Okay. It was $20 and I was like, you know what? Let's follow it. I was watching it. It went up to like $50 and I was like, wow, that's pretty crazy. And once this actually becomes Lucid Motor becomes on, cars are on the road, it's going to skyrocket a little bit. So,
what
I
about
picked it up.
Like GSAT? Like what
GSAT, that was ridiculous. They do, it's a satellite company. It's supposed to be along with 5G for the future. So I invested in that. HCMC, that was off Wall Street Bets. I saw that on the Reddit. I was like, you know what?
That's fine. Yeah. People get ideas.
Yeah. Well, I was like, it cost me, $135.
Man, what are they saying at Wall Street Bets? Are there people still involved in this stock? Or
That one,
do they tell you like what to do when it goes down?
I just saw it in the feed, like constantly in the feed. And this was, mind you, this was like a month and a half ago, 2 months ago when I bought it. I saw that in the feed and I was like, you know what? Like $135 for 50K shares. It's not going to go to $1 or anything like that, but see what happens, because I just wanted to put my trust in there a little bit, but it's only $80. It's not.
So you're thinking right now that you could buy, like, you get more shares of it, so you can make more money off of it.
As of right now, no, I'm leaving that one be. That's
but
fine.
You have like a ton of shares. Of it, right?
Yeah, that's till whenever, if it goes bankrupt, whatever. I lost $135. I'm down $80. Now 85. That's all right. That's nothing. Whole, that's another one I love. That's going to be the merger with Astra. That one I'm down big on. That's another $260. That's still kind of in the SPAC stage though. So when that goes through.
Now let's talk about Plug Power, which a lot of people will be familiar with. You bought Plug Power. I think you were up on it one time, right?
Yes, I was. And then I bought it back after the financial, when they messed up their auditing and they had to go back. So I purchased it after that dip. And as of right now, it's still dipping because I was researching it, and they actually are in a 5T hydrogen fund where they're with a bunch of other companies like Baker Hughes, and they're offering credit to customers, which isn't that great because that means there's not a lot of people interested in their company. Mm-hmm. So with that information, that was after I bought it, and since then it's been pretty right after that. With
UEC is another name on here, which is
UEC was your recommendation. Yep.
That's the one that's green.
Yep.
That's the only one that's here that's in our portfolios.
Right.
And you recommended it. It's nice you have access to me, but you don't buy any of the stocks here. It's awesome, Joe. Good for you. Again, at that, it's it's funny. Like your dad is Alex Rodriguez, and that you just learning baseball from somebody else, which is fine. But so if you're on a you probably listen to iTunes. That's where we get most of our downloads. But we do have a Curzio Research YouTube page where I have Joe's portfolio up that you can view it, and that's where we're going through this, going through the stocks. So let's start here, Joe. Let me ask you a few questions here. So you bought these stocks for a certain reason, and they're down. Does that reason still exist? I mean, because you buy a stock and say, okay, here's the reason I'm buying it, but it seems like for some of these names, that reason no longer exists. If it doesn't, then, why would you continue to own it? Right.
So you always talk about how you have to have a thesis for a stock. Most of these I have a thesis for, unlike, say HCMC or SIRC, but that one we'll see. I'm owning them just so I don't lose these gains at the moment. I still believe in them.
But they're not gains, they're losses.
They're losses, yeah, but I'm hoping they're going to be gains soon. I still believe in them. Really, I could sell because I'm missing a lot of opportunity right now, but that is a large percentage of my portfolio that I'm just not ready to throw away.
Now, I'm going to tell you something about stocks, which you might not know, but they don't care about you.
I know. They don't care about me at all.
They don't care who you are, so there should never be an emotional attachment to this. Right. But are you familiar with opportunity costs? And what
yes.
That means? Okay, yep. So when I look at opportunity costs, one of the biggest mistakes I make with portfolios is when you're losing money, like there should be an exit strategy. Everyone has an exit strategy, and almost everyone has a thesis, right? Most of the time. If you're a trader, maybe something broke to a 200-day moving average, which means if it goes high and then comes back below that, they're going to sell it, right? That's their discipline. My discipline is I always put stop losses on stocks because you don't know how high they can go and you don't know how low they can go. And, for me, you want to protect your capital, Joe. The best thing is to protect your capital, because say if the market crashes from here, these things are going to get destroyed. A lot of these things don't have profits or anything. I mean, yep. You think that they're down a little bit. I mean, when you live through certain markets like the dot-com crash and people got a little whiff of it during the pandemic in March, but even the credit crisis with, small caps were falling 85% from their highs. I mean, it was insane. And people getting crushed, and then you see the margin come out and then you get nuts. But one of the things I could suggest is, and again, feel free to do whatever you want. I really appreciate you coming on and showing this. It's a very big deal, Joe, really. But, when I look at your portfolio, I would say that, don't be afraid to get out of those stocks that no longer, where your thesis doesn't hold water, right? Because one of the things you just said is, hey, I'm holding these names because I believe in them and I think they're going to come back. But in the meantime, when you have these losses, and it's all about controlling your emotions and your psychology. And
Right.
that is the most important thing, because sentiment really drives stocks, right? It's how people feel about them. It's the reason why Peloton is trading at whatever times, a million times earnings, is because sentiment, people love the product. So sentiment has a lot to do with this. And when you're sitting on losers, that's what you focus on. Even if you had like most of these were winners, hey, people just tend to look at the loser and be like, oh man, should I buy more? Should I buy more? Should I buy more? When in fact, if you had a stop loss on this, of say, these are aggressive stocks of say 30%, and you stopped out, it would have saved you a lot of money on these. But more important, now you have that cash and you're liquid and you could buy, because, we talk about other things. What are some of the other things? I think you said, Facebook's amazing, right? You could have bought Facebook. Facebook's at an all-time high. You could have bought that a couple months ago, right? So, that's the biggest thing when you're looking at these stocks, where most people are going to hold their losers longer and sell their winners quicker, which is crazy, because it's one of the biggest mistakes people make. And I'm saying this because I've made this mistake. I can't tell you how many people I know that sold Amazon at like 300, 400, what is it, 33, whatever it is, 3,300. How many people sold Microsoft who own Microsoft who don't own it anymore, or Netflix who don't own it anymore? I mean, once you get up a certain percentage of 100%, and if you put, $1,000 into the stock and it's up, and it doubles, if you sell half, your cost basis is zero. That means if that stock goes to zero, you still break even. So you get to hold it, and you don't really care if it goes down 10, 50% here or there, whatever. You get to look at it long term. Mm-hmm. And that's how you have these monster life-changing winners. Because if you sell too early, you're not going to have those. But sitting on losers, right now you're doing nothing with your portfolio, where you're seeing a lot of sectors do good. They're hitting new highs as we speak. But that's one of the things that I would suggest. I guess, let me ask you this question, Joe. What would make you sell one of these stocks?
Pretty much sell. Pretty much just emotion. Or if really something kind of tanked. But at the same time, if it tanks even farther, that would probably persuade me not to sell. But I mean, looking as of right now, I'm probably ready to let go GSAT and probably ABML. Those would probably be my top two, even though ABML is a significant loss. Mm-hmm. I'd probably let go of those two and just use, at least have that capital.
What was the other one? ABML?
Yep. And GSAT. And then if I did let go of three of them.
Those are two of your biggest losses, right?
GSAT is down, I'm down 121, and then ABML, I'm down 243.
Yeah. So it seems like as they go down further, that's when you make your mind to sell it. When in reality, if you sold these like 2 months ago, and then say if you put it in Facebook, and again, people look at Facebook, they look at a stock that trades at 300 or 400, because one of the stocks you own here, you own 50,000 shares of, and it's cool. You think that, it's all about percentages, right? So if you buy Amazon and you put in, again, $1,000 and it goes up 20%, it's 200, but you made money. Yeah. Just like these stocks, if it goes up 20% and people say, well, it's too high, it has nothing to do with price, it was percentage gains, right? That's the biggest thing. So, what you really need to focus on. And think about that, because if you bought Netflix, in the hundreds, if you bought, whatever, I remember people buying at 70, 80, 90 Netflix or Tesla at 150, 200, and if it goes to 200, it goes to 354, and you're like, you know what? Wow, this valuation is crazy. I'm not going to sell my whole position because I don't know how much higher it can go. Right. And you sell a portion of it, but now you're liquid and you could buy lots of things. Because right now you're sitting on a portfolio where you're not liquid and you're not taking advantage of the things you like. And since you have access to me, the portfolio, you're going to find lots and lots of ideas that are really cool. So that's one of the things that I would definitely work on. And, guys, I want to hear from you too, because I'm getting lots of positive response on this, and just people saying, hey, I make the same mistakes. And again, this is, I appreciate you coming on, Joe. I really do. Because a lot of people won't come on and be like, but this is how you learn. The fact that you're coming on makes me think, it makes me know that one is you're coachable, which is great. You care about and going through this process is a great deal, because you're going to lose some money and you're down a little bit, but that's nothing compared to the amount of money you're going to make in the future. And that's, again, you have a lot of working power where you're going to generate, a ton of money over, whatever career you choose. But, I appreciate you really coming on here, man. It means a big deal. But those are some of the things I would recommend. Like, just remember that opportunity cost where you're sitting on this portfolio the last 3 times I came here. The market's at all-time high. These stocks are still down. So you want to take advantage of it. And what's your thesis for these names? Well, I bought them because I saw it on a blog. Well, did they follow up and tell you to sell it?
Well, on Wall Street Bets, I actually did not see that. No, so I just took that
so
kind
it's
of
up
blind.
to you, right?
Yeah, exactly.
That's what they're going to do
Your own
on
due
most of these
diligence. Yep.
sites and YouTube channels is they'll tell you, we love this stock, when it's down, nobody tells you what to do.
Exactly.
And that's why, like, with our portfolios, look, we're archived all of our issues. You can go back, and there's things I got wrong, really wrong. You can go back. I'm right more than I'm wrong, but you could see what we've done and being held accountable.
Track record, yeah.
What we recommended, if our thesis came true, how we handled the loser, how we stopped out and said, okay, let's preserve our capital. We'll make it up. We'll try to make it up in the next position. Where I see a lot of these YouTube channels and different people, they'll recommend things. They don't come back. And that happens even on TV, Joe, on CNBC, where you have people recommending some crazy stocks. And these things will go down tremendously. They never go on CNBC again. And the next time they go on CNBC, they're like, oh, yeah, I sold that when it went down 5%. It's down like 40%. I'm like, oh, thanks for letting everybody know that you told to buy it. So, it is a crazy market out there, but we're always learning, Joe. I'm learning every single day. I've covered all industries. I'm always learning about something new. And that's why I love this job, because I always say it's like golf. If you shoot, a 60, you're going to be like, I got to shoot a 59. Like you can't beat it, but you can consistently get better and better and better. And the way you get better and better and better is by making mistakes. So when you make those mistakes, the biggest thing I could tell you today is you want to limit those losses.
Right.
Okay, because you're going to be wrong. Everybody's going to be wrong. Warren Buffett has been wrong on a lot of stocks. So is Icon. Of course, these are legends that I'm bringing up and have amazing track records, but they've been wrong. But the best investors limit their losses when they're wrong, and they maximize the gains when they're right. And that's how you become a really, really good investor. Because if you're looking at your age at 21, you might be like 30 years is a hell of a long time. I'm there, bro. It's not that long. It happens really freaking quickly, and it's not fun.
Yeah.
But I wish I was at your age at 21, and I had my dad, who I didn't lean on as much, at that age. So I love the fact that you're doing that now. And if I did, just buying the S&P 500 and putting, $1,000, starting, and then, as I got a job, putting like $200 a month. I mean, you know what that would be worth right now? 30 years later. Holy cow. And I know it's crazy to look at that. I'm not telling you should invest like that, but a portion of your portfolio should be invested like that. Okay. You should be more risky because you're younger and taking on risk and stuff like that. And also be careful with margin, because when you're wrong, you've seen it with the stories in the news. When you're wrong, you're wiped out. You're gone.
Yep.
And the biggest thing when it comes to the markets is you want to see bear markets if you're prepared, because that's when the greatest investors make an absolute fortune, because everything goes on sale, it goes cheap, and everyone loses their money. And when you see things get discounted, like even during a credit crisis, when the European banks were forced to sell a lot of their loans to lower their leverage, private equity funds were some of the only ones in America that were able to buy this stuff, and they made an absolute fortune on it. Absolute fortune, because they're the ones that had the cash to buy it at the absolute low. And that's how you make a killing, not by buying these things really when everything's at all-time highs. It's when the market crashes. How do you protect yourself? Because when everyone's selling and you see the forced selling and what it does to some of these stocks, right? We saw Discovery and was it Viacom or whatever, when funds blow up, that's the opportunity where you could buy a lot of this stuff when it gets crushed. And again, that's one of the things you really want to focus on instead of holding on to the losers. Again, it's up to you. Whatever you want to do, these are just some suggestions. And these suggestions are for someone that's made mistakes in the past. So I'm not saying like I know everything. Again, we're always learning at this job, but so what do you think about that, Joe?
I love the input. I think in a couple weeks from now, we'll do another portfolio update. We'll keep it rolling. If people want to see it, and we'll definitely switch everything around, and we'll update everything and keep our audience updated. No,
it sounds good, and I really appreciate it because the feedback that we've got from this show is incredible. I didn't think it would be that incredible. But let me know what you thought, guys. FrankCurzioResearch.com. I'm doing again. I say this podcast. I don't just say it. I mean, this podcast is about you, not about me. So let me know, what you guys want to hear, some of the guests. But I got a lot of positive comments on this sector because a lot of people were learning a lot and sitting in the same boat as Joe. And again, we all want to be better investors. That's the goal here, and that's what we're trying to do. So, Joe, I want to say thank you so much for coming on. I appreciate it. And you'll join us again soon, right, buddy?
Yep. Thanks for having me.
All right, guys, let's move on here to a few more things. There's two big stories, and I want to talk about there's a lot of so-called experts in the market who are predicting that Bitcoin is going to collapse. And I'm not talking about people who said it was going to collapse and continue to say it's going, Bitcoin's worthless. I'm not talking about those people. I'm talking about people who actually own Bitcoin, who are selling a little bit of it and saying, hey, we could see a nice pullback. And why are they saying this? Because we're seeing worldwide adoption everywhere. We saw Goldman come out, Coinbase IPOs next week. Goldman said they're going to offer cryptocurrencies to their clients. Why are they doing that? Because cryptocurrencies, and maybe I can bring some up here if you're watching on YouTube. This market, the entire market, hit $2 trillion. I love doing this stuff on the fly. So it hit $2 trillion. I'm going to share my screen. It's like 1.9 trillion now. So that's a total market cap. Think about that for a minute. Now you're looking at Bitcoin. There's 100 companies, close to 100 companies, 100 tokens, coins, whatever you want to call them. These utility tokens, not security tokens like our CEO token, that are trading at $1 billion valuation or more. And when you look at these, now you're talking about liquidity. Liquidity is the biggest thing when it comes to institutions. Once they can get it in and once they know they can make money off it, they'll get in. They don't care what it is. It's not like they're against Bitcoin or not. If the fundamentals suggest it, or if they check off the right boxes, well, there's a massive liquid market, we can get in and out of it, we can arbitrage, they're going to do it, right? That's why they've been going back and forth. Now that this market, and just to show you how crazy this is, and you can go to coinmarketcap.com, if you look at the total market cap year to date, it started out at $770 billion, and it's close to $2 trillion now. Guys, we're in April. Right? I mean, it's crazy. I mean, we're talking about the entire market. That's how much demand was. Again, we've seen PayPal come out with announcements. We've seen more companies buying and balance sheets. Again, crypto's near its all-time high, Ethereum near the all-time high. But Bitcoin has pulled back a little bit, and some people are predicting that it could pull back even further. And I wanted to talk about one of the things that they're talking about, because you don't really see this. You're not going to see this on CNBC. You'll see this in the crypto enthusiasts that they know about it. But there's something called the Kimchi premium. So the Kimchi premium is, and by the way, that's a Korean, it's a pickled side dish. So it's basically the spread between Bitcoin in South Korea and Western exchanges. So right now it's trading at 66,000. And as you know, we're trading probably around 57, 58,000 Bitcoin. So there's a big premium. Now, when you look at this premium, and hopefully I can bring up a chart here and show you guys, because I do have this someplace. But when you bring up this premium, the last time we had such a big premium like this, and it's around 15%, it was the end of 2017. And that's when we saw crypto absolutely crash. And that's what's spooking investors right now. Now, you can't arbitrage this situation. It's very, very, very difficult because, and they say it's because of that premium is caused by, just different economies, different regulatory environments. But again, the last time we saw this big of a spread was back in late 2017, right before the market crash. So this is spooking investors. And look, it's an indicator. I want to throw it out there for you guys and show you. But at the end of the day, it is an indicator, and indicators work until they don't work. Now, if I see Bitcoin pull back below 50,000, 45,000, I'm going to look at this and say, I'm going to pay attention to Kimchi Premium. Again, you can Google it, you can see videos on it, whatever, but no one's really talking about it. But if you're looking at so-called people who have been in Bitcoin for a long time, this is the major reason. This is going on in some of the crypto sites saying, look, the Kimchi Premium is back. And some people are saying that's a bullshit. It's not. It's a bearish sign when you look at the numbers and the details. Because the last time this happened, the market crashed. So, and again, we've seen an amazing, unbelievable move in Bitcoin, right? So anything that could actually, spook investors is going to spook them because things are at all-time highs and people are sitting on a ton of money, which, $2 trillion in assets, which is up for grabs for anyone that's accepting Bitcoin. I mean, you have this massive economy, massive market of billionaires and millionaires now because of this. And the Goldman Sachs, the JP Morgans, and the Morgan Stanleys want to tap this. They want to tap it, and it makes sense because they're going to make money off it. That's what they care about, making money off it. And now that you have the volatility, you have this much adoption, it makes sense for them to get into this industry. And that's why you're seeing, Bitcoin move up higher. But again, it feels a little toppy here. But that Kimchi Premium, let's see. Let's monitor it again. I'm just throwing it out there. I know it's something I might be educating you about. I know we have a lot of crypto investors. And the last story I wanted to talk about, which I thought was a big deal, was China starting their own cryptocurrency. So it's a cyber yuan, stands to give Beijing power to track the spending in real time, plus money that isn't linked to the dollar or a dollar-denominated global financial system. This is very big news. Now, Wall Street Journal and a couple other companies, reported this happened like a couple days ago. Yeah, this makes sense from every level, right? Because when you have this, they have more control over you. They're going to monitor everything, right? It's not, hey, it's going on a blockchain and no one's going to, no, not China government. No, they want to know everything about everyone, all the money, where it is, everything. And this is going to help them. Now, they want to make this international. They want to, so what does that mean? The biggest advantage we have is the dollar. The whole entire world loves the dollar, right? Everybody, you don't think so? It's everybody wants dollars. I mean, everybody. Look at Coinbase. Coinbase cryptocurrency, they're doing an IPO. Dollars, right? They're doing it fiat. So, yeah, they're going on major exchange, right? They're doing that next week. So even other countries, I mean, the dollar is golden, right? Right now, people might say, well, it is. It is right now. It's going to be that way for a while. Whether you like it or not, that's the way it is. If not, if you don't think so, give me all your dollars. I'll take them. I'll take everything. So if you really believe that. I mean, even the guys who are gold and you need to buy gold now or gold coins, you're paying in U.S. dollars. Well, they're taking you U.S. dollars and they're giving you gold. It's kind of funny when you think about it. But when I see this, it's a way for, it's a little bit scary. It's not going to happen overnight, but the euro, I think 85% of transactions are something internationally through euro. You want to be able to challenge the dollar. That's the big advantage that the U.S. has. And for China to get into this, I will say the biggest story to me, and again, you can find this, look at Wall Street Journal, they have stories on this everywhere that's announced this week, is the U.S. is falling very, very far behind in crypto. And I get it because I research a lot of these names and coins and stuff, and you can't find anything on them. I mean, you don't know anything about them. You don't know any fundamentals. $1 billion valuations, I would say 80% of those that have $1 billion valuation or higher. I mean, the ones that are lower than that, there's so many crappy ones, but you can't even find what their token represents. It's a utility. You don't have an equity stake. These companies get bought out for $50 billion. You get nothing. You don't have equity in a company. You're just owning these tokens because of their utility feature, maybe. And what is that utility feature? For some of these companies, it's nothing. Ripple, it's nothing. Ripple's a great company, but the token offers investors nothing. But the U.S. is falling behind because they need to regulate this industry and they don't really understand it. But other countries are really kicking our ass right now. And even security tokens, where I have Securitized, I mean, they're focusing on Japan in that market and overseas now because, we're waiting for this market to really fully develop. But at the end of the day, it's, we need more regulation. Again, people from crypto hate that, but that's going to allow it to scale. And especially in the security token market where we trade, we have to trade on a foreign exchange because there's no security token markets open. We're hoping to change that by getting our financials audited, which is coming out. We're going to have our annual meeting for our token. If anyone's interested, it's going to be May 13th. We're going to send out an invitation for anyone, on our list. And anyone can listen in, go over company fundamentals, what we're doing with the token, what we're seeing. It's going to be really, really cool putting everything together. But we're providing audited financials, which I don't think any token in the industry has on both sides. Nobody really has that. Because you need to have transparency and you need to have liquidity. So if we are able to do that and then hopefully go to like a Coinbase and there's 10 to 20 exchanges ready to open up across the U.S., especially if they're going to trade security tokens and even for retail investors, you're going to see that really happen over the next few months and through this year. But when that happens, now we're going to bring liquidity to our token. And now it's going to be based just like a stock on how we do it off fundamentals, how we're growing the company. But when you see China doing this and you see so many other countries like just going all in and we're just sitting here, guys, man, it's killing us. I mean, this is a serious threat, not a threat right away, but in 7 to 10 years, how long is it going to take for the U.S. to really get off their ass and say, okay, let's regulate this. The stuff that we don't know, we can't see, get it out of the way. All right, these guys can't be trading in the U.S., but it's going to open a door to more companies, real companies that people could trust that trade here. You're going to have investors that trust the system, which a lot of them trust Coinbase right now, which is cool. They don't trade a lot in it, but they trade some coins, outside of Bitcoin, Ethereum, Litecoin on their site. And it's going to open up the door to more innovation, more money coming into the market, which is the key because blockchain's in its infancy. And we're seeing now NFTs. And next going to be security tokens. Before that was DeFi. This is like the internet. Things get developed at different stages and more. It's going to disrupt more and more markets going forward. It's here. Crypto's here. Blockchain's here. It's not going away. It's not a fad, as we could see now. And it is, when you see all these major companies jumping in, it's pretty exciting. But the U.S. has to get off their ass and really, really focus on regulating this industry because they're falling way behind. And I think this China announcement, the new digital currency, is going to be a wake-up call. And it should be a wake-up call. Hopefully it is. So, talked about a lot today. Great interview with John Petrides. Great stuff from Joe Davide. One note here, getting lots of requests for our crypto intelligence newsletter. Again, it said our average is up over 750%, which is insane. Of course, that doesn't mean the situations that we recommend going forward are going to see those type of gains. But we've able to really spot and get into trends because of our position here, right? Because we're right in the middle of this entire market, and we're able to see a lot of trends. I have great contacts in this industry. And you know, that crypto intelligence newsletter, you know, we educate investors, we dial it down and make it real simple. We have videos and stuff like that. But right now we're sitting on 2 20x winners in a portfolio, 1 32x winner, and 11 out of 15 are up triple digits. Now, 2 things. If you're a subscriber, one is my latest issue is coming out after the close today. Definitely take a look. Awesome name. New investors can now purchase this name on 2 different platforms, which they couldn't purchase it. This company, this crypto, is not a BS company. It's doing over $6 billion a month in transactions. And this number is going to explode in the years ahead. It has been running up because now it's trading. U.S. investors can own it. You see in volume up 80% over the past week because more and more people are able to purchase it. As probably why some of the biggest names in crypto funded this company back in December. It's very, very exciting. So it's a name you definitely don't know if you're not familiar with crypto. And even if you are experienced crypto traders, this is a name that's kind of like, you know, off the radar a little bit. So I really think that could be our next big winner. I'm very excited about that pick. I did a lot of research on it. The second thing here, where we are offering a special discount, a 50% discount for anyone who wants to subscribe. And that's going to go on for a couple more days. I think we did 10 days total. We're at 7 or 8 now. But yeah, I discounted the price of this newsletter by 50%, which is huge. Usually nobody in their right mind would do that with the performance that we have in the track record. The reason is I'm still finding incredible ideas in this space, including a lot of stock picks. Some of the biggest winners in our portfolio are pure play stock picks that were trading over the counter that few people knew about. And now these are major corporations now. Silvergate's one of them. Voyager Digital is another with 86 cents. I mean, this thing is 20 something, whatever it is. I mean, we're up tremendously on these names. So these are names that anyone could buy in their portfolio through your E-Trade account, Schwab account. And if you're not familiar with crypto and how to buy some of these cryptos on different exchanges, no worries. Because I do a lot of videos, just like if you're a subscriber to my other products. You see me doing videos. I'm the one that's actually doing the research on this and writing this. You're not just getting an email from someone you think it is. It's actually me. So I teach you how to open accounts on Coinbase, Crack, and different exchanges to trade cryptos. Again, all this is through video, and I simplify it. I like to say this, but this term I kind of hate using when I say I dial it down so that a 3rd grader or 4th grader will be able to trade cryptos, because it makes it sound like, you know, I'm dumbing it down. I'm not. And I hate when people say, well, dumbing it down, because if you're not familiar with crypto, it's still going to, you know, there's a learning curve there. I don't care how people say, oh, it's easy to open a wallet. Well, it's not easy if you never did it before. So we make sure we cover everything, you know, exactly how to purchase, why we're doing it, the research. We go over everything in these videos. And yeah, so that crypto intelligence newsletter is being discounted by 50%. Again, this is something I want to do for you guys. And I like the discount newsletters when I'm finding really great ideas. And the last 2 ideas in that newsletter, I'm very, 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 very excited about. So, yeah, if you're interested in that offer, you can go to our website at curzioresearch.com. If not, no worries. But I am getting a lot of emails on it, and we are starting to get a lot of new subscribers, which is really, really cool. So, guys, that's it for me. Thanks so much for listening. March Madness is over. Baylor, holy cow. That was amazing. I mean, they really punched Gonzaga right in the face. I've never seen such a great team get so flustered and have no idea what to do. Like, no idea what to do. Every facet of the game. Defense, they were hitting every shot. They just were tougher than them. I mean, it was over at half. It was over, even though they cut it to 10. But, you know, great job by Baylor. They were a great team all year, other than like 2 or 3 weeks. They were in the hardest division, had the hardest road. They played Wisconsin first. Remember, Wisconsin blew out North Carolina. Beat Villanova. They had to play the 2, 3, 4 seed. If you look at Gonzaga, I think the highest seed they played to get to that tournament was an 8 seed. Right? They play UCLA in the Final Four. But what a fantastic job. Congratulations to Baylor. And again, what a great, great tournament. So again, that's it for me. And I'll see you guys in 7 days. Take care.